Welcome to Act and Unwind, an ongoing conversation on a free and virtuous society. I'm your host, Eric Kohn. I want to thank you for listening and ask that if you're listening to us on our website, that you navigate right now to the show notes for this episode, where you will find a link to subscribe directly to Act and Unwind at Apple Podcasts, Google Podcasts, Spotify, or anywhere else where you listen to find podcasts. And if you like this program, please leave us a 5-star review at Apple Podcasts so as to help more people find our show. This week, I'm joined by Dan Huger, Acton's librarian and a research associate, and Dylan Pahman, executive editor of the Journal of Markets and Morality and a research fellow here at Acton. And this week, we're thrilled to be joined by a very special guest, the author of There's No Free Lunch, 250 Economic Truths, the founder, managing partner, and chief investment officer of the Bahnsen Group, David Bahnsen. Today, on this all-economics-focused edition of Acton Unwind, we'll take stock of the state of the economy, what 2 quarters of negative GDP growth mean, how bad inflation is, what the Fed is doing, and a kind of potpourri grab bag of more econ-related topics. So I would like to start by asking you, David, just what is a recession and are we in one?
All right. Well, this has become a pretty politically loaded question. And yet I think for those of us that are focused on economic vocabulary, the challenge is that there isn't a specific definition that is either governmental or regulatory or even academic. Now, I do believe that there has been a traditional understanding, which may very well be different than a definition. But that traditional understanding has been essentially 2 consecutive quarters of negative GDP growth. So I think you have 2 challenges here. First is whether or not that traditional understanding is equivalent to a hard definition. And second is whether or not the thing you're measuring has a great definition, which is GDP growth. And there's some controversy around even that object of the study, the GDP, the gross domestic product itself. So the long answer to your short question is that right now, people's definition of recession certainly seems to be hinging upon some sort of a political aspiration or leaning. But I do think it's entirely fair to say that 2 things are true at once. We're in the traditional understanding of recession, which is technically 2 quarters of negative GDP growth. And number 2, there are a lot of parts of the economy right now that do not meet recessionary criteria.
Yeah, separating out that the 2 parts of the definition, the political one and the economic one, although, David, because I heard you interviewed on Jonah Goldberg's podcast, I thought you made an interesting point that I wasn't really aware of, that essentially the definition of a recession is farmed out to the Bureau of Economic Analysis?
The NBER, the National Bureau of Economic Research.
National Bureau of Economic Research. And more or less the definition is it's a recession when we say it's a recession. I mean, we've had the shorthand of the 2 quarters of negative growth, but they look at a whole lot of other factors. What else would they look at? What else should we be looking at right now? And what are those elements of the economy that you just referenced that are not looking recessionary?
Right. Well, let me make a point. The NBR generally does not label something a recession till much later, but that's generally not a problem. Because much like a weatherman telling you after the weekend of Hurricane Harvey that we had a hurricane, generally no one needs a weatherman to tell them when they're in a hurricane, right? So they may not have technically labeled 2008 a recession until 2009, but when there were quite literally millions, and in fact tens of millions of layoffs, it was so obvious that people didn't need it. The problem right now is you have 3.6% unemployment and you have millions of job openings that employers are trying to fill, not desperate employees looking for jobs. And so that feels anti-recessionary. And yet GDP growth is a weighted formula for inventories, consumer activity, business production, and trade. And we had a huge increase to GDP from imports, exports. China exported less to us than normal because of their lockdown, and we exported more than ever because of obvious energy factors last quarter. And yet the consumer was down in its activity relative to last year, where the reopening from COVID was creating a very high base effect. But inventories are really what caused this negative GDP print. And so the best thing I can say is that that's the way we've always measured it. So now is not the right time for anyone to be critiquing the definition of GDP. But I will say, because I've been saying it for 15 years, so I don't feel like I'm Johnny come lately trying to make a political point on Fox News. Business investment is what I care about because I'm focused on productivity. I don't believe you go into recession when businesses are investing a lot into capital expenditures and things that are going to increase output. And business investment was just flat for the quarter. It wasn't negative, but it wasn't positive enough to offset the effect of declining inventories.
So Leo Tolstoy famously said that all happy families are the same and that unhappy families are all unhappy in their own particular ways. And I think this is true about economies, and that functional economies where there's economic growth, those are all essentially the same. Dysfunctional economies are all very different for a lot of those factors. Recession tends to politically be interpreted as a negative thing. This is something you want this label on your political opponents if you can tag them with some sort of responsibility for it. Now, very famously, George H.W. Bush, many people attribute, the loss of the presidential election in 1992 to a recession that later, 1 year later, when the actual data comes out, at the time of the election, we were already out of the recession. So there's certainly political stakes here. And I think that obscures a lot of the conversation and a lot of the details that David is sort of rightfully drawing our attention to.
I agree with that. I love that quote from Tolstoy. And yeah, there's more than one ways to make a mess, right? There's only one way to clean everything up and make it look good. So on a variety of metrics, as already mentioned, we could be doing a lot better. I guess I'm like further skeptical. I don't know. I don't have much of a say in, what label do we give this. But, productivity measures, labor shortages are at least pretty strong evidence that productivity could be a lot better. Right? Companies want to hire, they want to be producing more, and they can't. We still have supply chain issues, which is slowing down productivity. So all these sorts of things are additional factors. Then we have, of course, inflation on top of all of this. So we're in the midst of a mess, and I guess I would be curious for some input in terms of not simply where are we now, but what is our trajectory? Where is this mess headed? Does it look like it's getting cleaned up? I don't quite see that myself. Or does it look like it could potentially get worse?
I'll make a point real quick about the politics, since we've all referenced it. There was a good analogy that I heard on the Dispatch podcast that there's this odd Streisand effect thing going on with the way that the Biden White House has been talking about this in coming out so quickly ahead of actually getting the GDP numbers and saying, actually, that whole shorthand thing of 2 quarters of negative growth being a recession, it's not that's not actually the definition of a recession, which, again, as David has elucidated, is, there's truth in all of that. But there's the doth protest too much problem. Like, one, that was the first indication to me that's like, yeah, they already know we're going to have another quarter of negative GDP growth, which is why they're talking about all of this. But it put the word recession in so many more people's mouths than I wonder if we would have gotten if we just would have had the news come out and it be handled the way that it would typically be handled. And not that it's, the 2 quarters of negative growth and that being the shorthand for recession is ho-hum to anybody. But now we're having this whole debate over what actually is a recession that gets us all talking about the idea of recession more than I think we would have been if the numbers had just come out and it would have been just like a regular economic news cycle.
Well, somebody sounds like a first-rate marketing and political consulting expert. Because, Eric, the idea that the word recession is what the Democrats want to be uttered right now is preposterous. And I agree with you 100%. The story became the kind of cover-up, if you will, as opposed to the event itself. And this is why recession, very similar to my weather analogy, it does not need controversial talk or debate. And that's what really the White House preemptive efforts helped to spark. It's a crude analogy, but I closed an article I wrote for World Opinions on Friday with a parallel to the famous line from Justice Potter about pornography, that he knows he can't define it. He knows it when he sees it. And I think that this is the fact for American people with recession. There's another old joke, by the way, about a recession is when a neighbor loses his job, and a depression is when you lose your job, something to that effect. We don't have a lot of joblessness right now, but we know of the pricing pressures, particularly in energy and food. And we know that there is a slowdown in activity, much of which is a slowdown relative to what took place in the COVID reopening. I would just simply say, to Dylan's point, that the skepticism about where we go in the economy from here is entirely legitimate, and I frankly think will very likely play out. It is just simply predictive, though. It is not descriptive. When we describe what just happened as a lagging indicator, we're limited to the data from Q2, and the data from Q2 is everything that the current environment does not like in terms of cable news and Twitter. It was nuanced. It was split. There was very positive labor data and very negative or trending negative consumer data, confidence data, sentiment. Where we go from here, I'm entirely open to various predictions. My own would be that if we do go into a recession of more known and clear magnitude, that it will prove to be a shallow one. For a number of reasons in credit and banking. But nevertheless, where we are now, I think most people can at least agree on this. If the political hats of leadership were being worn by Republicans, it would be labeled a recession in the mainstream media. And the environment we're in does not speak to a great forward-looking long-term outlook. If inventories had not been contracted last quarter and we technically were up 0.3%, would anyone be happy with that? See, that's the thing. It's so bothersome to me, is we got 1.6% real GDP growth for 15 years. So that's not a recession. There was no recession from the financial crisis to COVID. But we got half of real GDP growth for a generation. And I think that's a far worse story than a 2-quarter blip of recession. It just lacks the political sensationalism.
I remember being at a seminar years ago. I think it was actually, I think it was a George W. Bush who had a book out on like the 3% solution, talking about the idea of growing at 3%. And this is the idea that we should be pursuing. And yet we've had this, as David pointed out, we've had growth, but it has been some kind of like low at 1.6%, I believe that you said. What are the factors that contributed to us seeing that consistency, but consistently lower than we would probably like it to be, what we would want to see from the economy?
Debt. That's it. One word: debt, debt, debt. Excessive indebtedness is pulls future growth down. We spent money to pull into the present future growth, which means we're stuck with compressed growth into the future. And even if the household sector that held back economic growth in the mid-2000s, even though there was a lot of delevering there, we replaced it on the balance sheet of the federal government. And so the excessive indebtedness in any sovereign country represents the single secular factor in downward pressure on growth.
In this way, it's very similar to what Japan has experienced for a longer duration of time, similarly linked to indebtedness. You also can see persistently low growth due to sort of an overactive regulatory state and state apparatus. This is what after the Nehru presidency until Prime Minister Rao in India, they experienced persistent low growth, which actually got nicknamed the Hindu rate of growth. And people were frustrated. They were looking for sort of cultural accounts of this. It turns out that when Prime Minister Rao actually liberalized the economy, that anomaly disappeared. And India has since seen periods of much higher growth. So I think David is absolutely right in his assessment of what has caused this persistent low growth in the United States. But that persistent low growth can have a number of causes depending on sort of institutional arrangements and different contexts.
I'm curious about, sorry, I just have a lot of questions instead of important contributions, but I'm curious a little bit about, there's, of course, this being politicized and everybody wants to label this as we're in a recession and it's Biden's fault or whatever. I guess half the people want to do that. The other half don't. But to what degree does perception matter? So I know in the 80s, for example, we had a successful fight against inflation, but it took year after year after year of reducing the money supply until people noticed, right? Like there was a subjective side to all of it. To what degree will, the horror movie with was it Candyman, where you say the name 3 times? And, if you say recession 3 times in the mirror, do we just get a recession? Is this something that the popular perception is actually going to change consumer behavior, company behavior, anything like that? Or is it just a matter of, all we got to do is tweak a few different metrics and we'll be out of this?
I think that there's a very philosophical contingency in the way one answers your question. I think it's a really astute question. And I think you're very right empirically that this is a popular belief or question or inkling that there becomes a self-fulfilling prophecy, either in inflation or in recession talk, that confidence becomes, its own predictive reality. I myself, as a supply sider and one who takes a more anthropological view of economics, do not believe that humans act merely off of kind of water cooler talk. I think that the meeting of human needs is much more logical and rational. And if we start with a kind of easy example of delight, it's very hard for me to believe someone goes out, has the money, and is prepared to have a really nice steak dinner, and on the way there stops and says, I don't know, I keep hearing people talk about recession. I don't think I'm going to eat the steak tonight. I don't think humans behave that way, and I particularly don't think American consumers behave that way. But what I do think is susceptible is the production side, which ultimately drives output. If a business believes that recession is coming, they tend to pull back on productive investment with capital, with risk, with R&D, hirings, et cetera. This is why unemployment goes up in a recession generally early, because employers, seeing clouds coming, stop hiring and then start firing. And when they don't do that, it generally means they probably don't see clouds coming. And so I don't want to discount the possibility that there are pockets of people responding to the kind of ambient mood economically. But I have never been fully convinced that humans are ultimately that easily lulled. I think that the production side is far more indicative of where we will go than a kind of consumer sentiment, which effectively is backward looking. I think when people in the University of Michigan Consumer Confidence Index each month are being asked what they think, it has far more to do about what just got done happening the prior month or quarter than it does the next month or quarter.
I think David is right about the kind of calculations individuals make that, like you said, you're not going to turn around if you're going out for a steak dinner because of the tenor of the conversation or the capital N narrative that is going on right now. But allow me to make, if you will, another marketing or political communications point that I think is what's contributing to a lot of the frustration out there amongst people is the nature first of this, as we've been talking about here, the what is and is not a recession. I doubt there are very many people who could tell you that 2 quarters of negative GDP growth is the shorthand for a recession. But I think there are a lot of people out there who get the sense that, the economy is still not in a very good place right now. And I think what drives them crazy is that the reaction from the White House is to say, who are you going to believe, me or your lying eyes? It's Obi-Wan Kenobi. This is not the economy you're looking for, economic news you're looking for. Or it's Leslie Nielsen from The Naked Gun standing in front of the exploding fireworks factory saying, nothing to see here. I think that drives people nuts. And to have segue this into another part of this conversation, I think another great example of that kind of thing that drives people nuts is what have we been hearing a whole heck of a lot about over the last, 6, 7, 8 months? Inflation. What did we learn last week? That now there is this large piece of legislation that I do pure analysis, political analysis here, that I still think big question if this actually does end up getting enacted. But it is $433 billion in additional spending on a whole lot of things that are just slimmed down from the Build Back Better agenda bill. But now it's called the Inflation Reduction Act of 2022. So that changes things entirely. I think there are some instinctual things people have that you think they get the idea that, probably the government spending a whole lot more money we have right now isn't a great idea. And then just slapping a label of the Inflation Reduction Act on it, I think is one of those similar things that just frustrates people about how unserious the political actors who are supposed to be addressing these problems seem to be at this moment.
And if passed, it will increase inflation. I mean, they're raising corporate tax as part of this. I mean, that's an expense which has to be made up for either by reducing hours or raising prices. And, we already have 9% inflation as of last month's numbers and about 5% wage growth, which would be great. But with 9% inflation, that is a pay cut. People are, we have these labor shortages. People go out to eat and suddenly it takes an hour to get their food. Why? Because they don't have the wait staff or they don't have the kitchen staff. People, that's what your eyes see side of it. And it's because, businesses can't attract the labor. So we have this labor shortage. And yeah, that's not the technical definition of a recession, but it's something that people see every day and something that is not going to get any better with this kind of a proposal.
David, if I could have you weigh in real quick on, feel free to say anything you want about the Inflation Reduction Act of 2022. But we've talked about inflation before on this podcast and on Act and Line when I talked to you last November. And I believe we were already discussing the concern about inflation. And you made a good point about the intersection, again, of this in politics, of the certain sectors of the political right who've been claiming for a long time that all this additional government spending is going to create inflation. And your take on that is far more nuanced. So I wonder if you could break that, the whole nexus between increased government spending and the resulting, or perhaps not resulting, but the also concurrent inflation that we have going on.
Yeah, I hope you'll allow me to plug my weekly dividendcafe.com because I just got done writing a 2-part piece on this subject, and just this last Friday, the kind of second part conclusion of it was, to me, one of the most important pieces I've ever written. It is completely mythological that this act would be an Inflation Reduction Act, and yet I believe they know what I know, which is that the rate of inflation is about to come down and come down quite significantly. And therefore, they plan to put one of the great post hoc fallacies over on the American people that we've ever seen. By the way, if the inflation rate drops from the CPI print of July of 9% to something around 4 or 5, it will be double what the Fed's own target rate is, and yet it will be half of what it is now. So we can debate where we're headed, but I can give 15 anecdotal reasons why I think the inflation rate's about to come down, and that a lot of Republicans who made this political have walked into a trap. I don't want to give the government the power. I don't want to concede that the government has the ability to create inflation any more than I want to believe. I want to concede that they can take it away. And that will be the lesson that the public takes away from this, that the government has magical hands on something that they don't have. When we can be as critical as we should be of both monetary and fiscal policy by focusing on instability, which is what they've really created. But Dylan made the point I would make by saying we have this 9% inflation, and then his example was labor shortage at restaurants. But a labor shortage is not caused by too much money supply, and a labor shortage is certainly not caused by low interest rates. What we've had is a supply side deficiency caused by pandemic policies that were abysmally inadequate, reopenings that were just mysteriously ill-prepared for, and a series of policy errors. Now, the helicopter money of Biden's latest spending bill most certainly didn't help, but we're not out of the velocity trap we've been in for 20 years. Velocity is at ridiculously low levels. Money supply growth has contracted significantly over the last 9 months. And yet the supply side is why we have such high energy prices. Demand, by the way, is actually down a tiny bit from 2019. So the Fed can raise rates to 5% tomorrow. They're not going to cause for the fact that we don't have enough rigs producing oil and gas. And so to me, again, like the recession talk, two things can be, and in this case are true at once. And I don't mean this to be overly complex. I agree with you, Eric. It's somewhat nuanced, but I don't want it to be nuanced. I want it to be our understanding of economics, that the government doesn't have as much ability as we want to think they do. And anytime we say they created this inflation, we've been overspending for 20 years. We've been running up excessive debt for 20 years. We've had an unbelievably reckless monetary policy for 15 years. And we just got inflation the last 10 months. We have monetary instability that exacerbates boom-bust cycles because we've empowered Congress and empowered the Fed with way too much. But ultimately, the downward pressure on growth is deflationary. Our abysmal demographics and disinterest in having families is deflationary. And these are the things I think that are going to be bigger secular factors, even though right now in summer at 22, households are obviously still fighting higher prices at the grocery store.
So we're looking at a sort of Japanification, if you will. I wish it weren't so, but I think that's true. One of the interesting things in this conversation that I've noticed is, John Maynard Keynes in his general theory put a great emphasis on what he called animal spirits. And these are the attitudes that people have. And what I've heard the consensus around the table seems to be is that doesn't drive consumer behavior, that may drive isolated decisions in boardrooms, and it may drive naming conventions of legislations among politicians. But Eric, as you pointed out, a lot of what is in this bill is simply things that appeared in prior bills that failed. And this sort of branding has been reinterpreted. Is there a way in which all of this talk about the talk takes us away from actually investigating what's going on in the economies, in boardrooms, in households around the nation? And is this a sort of counterproductive political strategy for Republicans to focus on these issues of language?
I agree, and I think David's assessment that that Republicans or conservatives or whoever is criticizing the current administration have kind of walked into a political trap. There definitely seems to be some evidence for that. I would still, I think, be happy if inflation fell to 5% next numbers that we get. But yeah, the idea that we can just attribute this to, we passed an act of spending the right way and that affected the economy. The kind of alchemy, I don't know, Wizard of Oz sort of, don't look at the man behind the curtain. Maybe it's the reverse because there is no man behind the curtain. But the idea that the government is somehow doing this when what an economy really needs is production. That's how you get jobs. That's how you get growth. That's how you get opportunity. And we need to look at, what is it that, why do we still have supply chain issues when the pandemic is basically endemic now, right? We've learned to live with it. We've lifted all restrictions for the most part. And yet people are still like, we got to wait another month for that or whatever the case may be. Why aren't we drilling more when Russia is at war with Ukraine? Why aren't we tapping into our oil reserves? Why are we instead, going to the Saudis or whoever else? It's kind of crazy, and it's this weird sort of intentional or not, might just be, a happy result of incompetence, sort of misdirection for the public and perhaps even for people who should know better, that this isn't about whose side is winning. It's about a real science of economics and the real factors of production and what makes for the wealth of nations. And in those factors, our family is a little dysfunctional, to harken back to Tolstoy again.
I want to compound David's point about the relationship that would be implanted by the passage of this act. And then if David is correct, and I think we all hope that he is, that inflation is about to come down, the idea that would be communicated through that government does have this power to take inflation away. There's another correlative one that I think is out there as well, which is I saw this analysis not too long ago about the number of times that we have seen a recession when a Republican has been president versus when a Democrat has been president. And more or less the point is, and this is the part that drives me absolutely crazy, right, is that what the takeaway that political actors would want you to have from this is, if you want economic growth, elect Democrats, and if you want economic recessions, elect Republicans, when I think we all know that it's more complicated than that. I think a lot of people know it's more complicated than that. But from that very, I saw something also, similar, the friend shared, again, bad Facebook meme type stuff. But nonetheless, this is what does get circulated and people talk about, where he went and took a whole bunch of different economic charts and put where Reagan was elected, and then it's like, then debt explodes, and then all these other things happen. And it draws these tries to draw these direct lines between just the simple election of a president from a particular political party and economic outcomes. It is always driven me crazy, the extent to which we give, much in the same way that in sports, coaches get way too much credit for team success and way too much blame for team failures. Presidents get way too much credit for economic success and way too much blame for economic failure. But it is not in any individual president or political party's interest to try to blow up this impression, because, if it may hit you you may get the downside of it this time, you may get the upside of it next time, and you want all the glory when it comes around to you.
Well, you're exactly right. And the only resolution to this problem is not going to happen, which is for one side to stop doing it, and then that would enable the other side to stop doing it. It is the opposite. We're doubling down on the notion of an imperial economic presidency, the post hoc fallacy that goes in to that analysis. Now, generally, when people do it with the stock market, I'll point out that you actually have higher correlations with what National League pitchers did certain things in the stock market than even presidents, and various aspects of what Mercury was doing in the galaxy and so forth. So, the people have to be careful about correlation, causation. The other inconvenient truth on recession and stock market correlation to Republican-Democrat divide is people treat Nixon and Ford as if they were Republicans, which I take deep offense to, but on the economic side. But you know what? I think that the issue we face right now about the power we assume government has largely comes from the even bigger theological problem of the people wanting a king. And I have decided more recently that this is our problem with the Fed right now as well. For a long time, we've wanted both Congress and the presidency to solve things in our lives that I think they were ill-equipped to do, and it represented a hollowing out of civil society. But I think right now, the notion that the Fed is there to bail out Wall Street is not entirely true. I think they coddle risk assets. I think that sentiment notion that we talked about earlier, the self-fulfilling prophecy fear and Keynesian animal spirit thinking, I think that's consistent with Greenspan's old notion of wealth effect, that if people feel like their stock portfolios and their houses are worth more, that they spend more and are generally better economic actors as consumers. And I think all of it comes from the same fallacious thinking. But I noticed through COVID that there was a Main Street assumption that the Fed was going to do something. And I think there's a confusion on Main Street between what exactly is the Fed and what exactly is government and Treasury. And that those lines have gotten blurred to our own demise. But I guess what I'm getting at is this is sort of this crisis of responsibility I've been writing about for a while. And I do want to point out the term Japanification is one I think I've been using for 10 years now, but I have never charged a royalty for it. And I don't even remember who I stole it from. So it's a great word, and it absolutely describes what we're dealing with. But you know what the tragedy is that I can share with you three? Japanification was something I feared America going into economically from excessive indebtedness, but at least we had household formation offsetting it. We had a demography that was superior, giving us at least a slower form of Japanification. And we seem hell-bent on surrendering that advantage as well.
We've seen also compounding this is rates of immigration have fallen to very, very low levels under President Trump, but continuing throughout the Biden administration. So there are those, one sort of solution that I might suggest to the sort of political class is that the productive forces in society are all there. And there are ways in which you can get out of the way, and that, there can be, this isn't something that you turn off and on. The economy is made up of the decisions of millions of people. And the more you unleash those people's creative potential and those people's, opportunities to exchange and better themselves, their own lives, and their communities, then maybe you can get the productivity if you just allow it to happen. But the trends are not there, and there are huge obstacles. And I think David points to the very leading obstacle that is just productivity comes from people, and when you have less people, that's going to show up in the economy.
I think you're also getting a similar problem, especially from our national conservative friends that are treating the demography problem that we've been talking about the same way that a lot of people are or would be talking about the inflation problem if inflation comes down after this act is passed, to assume that government has the power to solve this problem. And I know it's an incredibly frustrating thing for a lot of people to want to be able to just not hear that, if we just pass certain legislation and make policy changes, we can incentivize more people to have children and to form families at earlier ages. And perhaps you can dabble on the margins and change some things. But this is a failure of an understanding of human anthropology that is leading us to this erroneous belief that government can solve these problems. I mean, I want to evoke again what I've continually said when we've discussed the incidence of mass shootings on this show, which is that, public policy can't heal broken souls. I think this is a similar problem that we have we want to have this belief that it's that easy to solve it, that if we just pass an act with the Family Formation Act of 2022, that we're going to turn this demography downturn around. But it's just far more complicated than that. And I get that that's unsatisfying to people, that it's like these things are hard and they're nuanced and they're based on a whole lot of different factors and things that take a whole lot of cultural effort to be able to change. And that just sounds like hard work. It'd be so much easier to just pass a bill. And that's where we are with this debate, sadly.
Yeah, I want to add to that on the theological point that David brought up, that there really is a problem. And this was pointed out, even in the early 20th century by in Russia, some critics of the Bolsheviks, and who, of course, ended up exiling them promptly as soon as they came to power. But this idea that there is a fallacious idea that if you don't have faith, right, if you don't have God, suddenly you don't have providence. And so you look to a king, right, or the government or whatever. You need an anthropological providence, which means that you need to have this government apparatus involved in everything, which suggests that to some degree, I don't think it's this simple, but to some degree, what is needed is more faith. Like, people need to start with the presumption, as did, frankly, some of the founding fathers. Faith in, the author of nature, faith in providence, even in a deistic sense, right? Some of them were not traditional Christians by what we might expect, but they believed in providence. They believed that there was a governor of the universe who was supreme over any human government. And if you have that starting assumption, there is just so much more that you can tolerate the government not being involved in, the state not being involved in, or for that matter, state and federal compared to local. You can just say, maybe we can take care of this ourselves. Maybe we get together, we pray, we raise a barn, whatever the activity may be, but we have some faith that things can get better. People, why aren't people going to work? They don't think it's worth it, right? To some degree, that they're making a calculation, and that's not a very hopeful position for a person to be in. We can criticize all we want, whatever incentives are keeping them home rather than applying for jobs, but there's something deeper than that. These are people saying, I don't think there's anything for me to do. I don't really see things getting any better. And so they're just going to kind of sit there and let the government do what it does for them to continue to enable that. That is a crisis of faith, among other things. Among serious economic dysfunction, there is a genuine spiritual problem.
As a rabbi friend of mine often points out to me that having children is an act of hope in the future. And if people aren't hopeful about the future, then they're less likely to have kids. And yes, that is,
I have 4 kids myself, and I will say that never do you get to a point when you say, okay, if we have a child, it's all going to work out perfectly. Maybe with the first one, you might be that naive. But you do it, and you have to have some hope, some faith in order to do it at all.
I also would point out that Japanification is primarily a problem for those of us who do love our kids.
Yeah.
And for those of us who do love their grandkids. It is a multi-generational challenge. You made the comment earlier, Eric, I knew what you meant by it, but you had said we can hope David's right about inflation coming down. But I do believe people misinterpret what I'm saying if they believe I'm saying it optimistically or positively. The reason I believe we face more deflationary pressures than inflationary is not optimistic. It's that I'm just simply predicting a hurricane instead of an earthquake. There's two natural disasters that are a byproduct of instability geologically, and I'm predicting one more than the other as the predominant Japanifying force over the next 30 years. But I think it's still a rather negative outlook. The difference is that we can very much overcome it with a spiritual awakening and a commitment to human activity in its best form that is really quite capable of the output necessary. You talked about the 80s inflation, and over time, as money supply came down, inflation began to come down with it. And at that time, the inflation was so predominantly monetary that the high level money supply came down as Volcker was cutting rates. But of course, there was another major thing going on at the time, and it was this devout attention to the supply side of the economy. And we know about it through marginal tax rates being cut from 70% to 28%. But it was also heavily deregulatory. There was a significant opening up of capital markets, and so that kind of what we call supply side revolution, where the blending of what became very popular on the op-ed page at the Wall Street Journal, along with Jack Kemp in the halls of Congress, and then the Reagan economic team with Laffer and Kudlow and these guys, you had a synthesis between the Fed and the supply side that really put downward pressure on inflation, but it was not deflationary. It was incredibly pro-growth. I am skeptical that right now we have the appetite for what it will take, let alone the ability to medically incur the hangover that we'd have to get through. And so I don't know what it will take to get on the other side of it, but I do believe that there's hope. It's just that back to my original point before my fourth tangent, the factor of having kids gives a long-term perspective that Keynes didn't have. The in the long run, we're all dead philosophy does not account for multi-generational covenantal realities. And I believe that Japanification is primarily an affront to those of us who care about the generations to come.
David, while we've got you and in the time we have left, I want to ask you something that I saw a friend of mine ask on social media, wanting to make sense of. I thought you may be a good person to offer an answer to this. And of course, Dan and Dylan, feel free to weigh in on it as well. From a story, I just pulled this one from CBS News. Here's your headline. Oil companies reap unprecedented profits as Americans struggle to pay for food and gas. Just delightful framing on that headline. The original piece that I saw someone, a kind of sort of friend online share, it was interesting. I actually clicked through and I read the article. And while he was making a point about profits, nowhere in there did it say anything about profits. It was entirely about revenues, which is one of those frustrating, really frustrating things. But so, David, what can you and your expertise in financial markets tell us about this data we're getting about oil companies, their profits, and the price of not only oil but gas, which always to me, from again coming from my marketing and political background, gas prices are just one of the most vexatious things because there's so many factors involved in it. And, you want to point to, the price of oil going up and down, but you don't see an impact at the pump. And in a way, the explanation of that is simple. You don't fill up with crude oil. There's a whole lot that goes into getting gasoline to it. So, David, I would love anything you could offer us on this story.
Well, just a few quick factoids. The profit margins at the downstream aspect, which is exactly where this comes down to, it's out of refinery margins, is about 1.5%. It's as thin as it gets. And to the extent that there will be, obviously, the higher revenues that the article disingenuously refers to, but there will be higher profits in 22, and they will not be equal to the losses of 20. See, I want to know where the headline was in 2020. that said oil companies suffer record losses as consumers keep getting free money from the government. Was that a big headline?
No, we were
Not that I remember.
We were getting cheap gas too.
2020 was a debacle, and 2022 has been a windfall because humans act. And the forces of supply and demand and the realities of economic logic have created such. It is a highly cyclical business. It is vexing what takes place, but the notion that it's corporate greed requires us to suspend belief in laws of economics. If indeed a downstream player like Exxon was gouging, then another downstream player like Chevron would gouge less and capture market share. We believe competition works in governing prices in every single aspect besides healthcare, where they have decided it doesn't. It most certainly does in the consumption of energy. All money is basically made downstream in the snacks and food and beverage they sell inside the gas stations. This is a preposterous conversation rooted in class envy. And if one wants to actually look at the P&L of big oil in America, I will do it with them, but they will start in 2020, not 2022.
I think one of the frustrations in these sorts of headlines is that it also fails to take account of the fact that this revenue is generated because people are using these services, that people are deriving value, that the money is not simply taken and lit on fire, that people actually receive gasoline. They actually receive, home heating oil. They actually receive tremendous benefit, that they can access a highly intensive capital good, that, the amount of money in crude oil extraction, in refineries, in processing is a tremendous outlay of capital that I can get access to a gallon at a time even at its highest prices. When you consider that sort of capital investment, it's just remarkable that literally, I can go, and I can get it from places that are literally across the street from each other, that post their prices on a big board that tell me exactly what I'm going to pay when I'm going to roll in there. And I don't think, revenues are reflective of that reality that people are choosing to use this product, and they're doing that on the basis of that product making their life better.
So as far as the headline, the framing, it's something I'm sure you can speak a little more to, Eric, but it reminds me a little bit. I had a conversation last week with a colleague here about the Chronicles of Narnia movies based on the children's books. And for a variety of reasons, they made 3 of those movies, and they didn't make any more, even though there's 7 books. The third one, one of the things they did was they basically invented a villain for the story because Hollywood could not handle a sort of, Odysseus, Odyssey kind of traveling story that didn't have that kind of antagonism or opposition. There's still character development. There's still a real story that happens. There's conflict, all those sorts of things. I think we have a huge problem in our media that the only narrative they know how to craft is one with a bad guy. It doesn't mean there aren't people that have made bad policy decisions, as we've just outlined. And you could call them bad guys, although a lot of times perhaps they're just incompetent. But I just don't think it's helpful. This idea of, gas prices are high, therefore the oil companies are the bad guys. Oil companies may be good or bad based on other reasons. I don't want to even get into that, right? But the economics is real. Human behavior affects the use of scarce goods. That just happens. There are relationships that people have been studying at least since Adam Smith, 250 years now. And there's a lot that left and right economists agree on that are just fundamental to how people behave. And perhaps we need to be thinking, or our media needs to be thinking of what is a different, instead of how are we going to craft the narrative, how are we going to tell the same story again, just like a Hollywood superhero film, or whatever. Maybe they need to think a bit more outside of the box. Maybe there's something deeper. There's a different kind of story that could be told here that might sell papers just as well.
There's not just the inclination to have to establish the black hat, the villain in all of this. It is in the media the desire or the need to reduce everything down to a binary conflict. Now, I remember this vividly from when I was in Chicago. This would have been, I think, 2013 was when the first big Chicago Public Schools, Chicago Teachers Union went out on strike. And if one were to read and watch the coverage of that story, everything was boiled down into a binary conflict between Karen Lewis, the president of the Chicago Teachers Union, and Rahm Emanuel, the mayor of Chicago, casting, Rahm Emanuel essentially as some kind of reformist trying to make changes to the Chicago public school system, and Karen Lewis as the defender of public education and teachers. And as an advocate for real school choice, which is something that Illinois only barely has today, my position is not represented by either one of these things. But there was no room in that debate for a third or fourth position, or even, to bring my more ardent libertarian friends in it, people who would ask the question, why do we even have public schools in the first place? These views aren't represented, and everything is reduced to this binary. And I think it does feed into that. That binary becomes hero versus villain. Somebody has to be the good guy. Somebody has to be the bad guy. And you know what? To some extent, let people make those decisions for themselves. But we probably don't have nearly enough time left to get into all of the problems that exist in our media. But we did talk a good amount about fundamental misunderstandings of economics and the economic way of thinking. And if people want to understand that better or know somebody who shares the kind of things on social media that I was talking about earlier and want that to be better, what they should do is they should get a copy of David Bahnsen's book. There's no free lunch, 250 Economic Truths, which is just I have a copy and have had a chance to read it, and love the way that it marries these short readings and explanations from some of the great economists and thinkers, including some from our own co-founder, Father Sirico. So I encourage people to go out and pick up that book to help understand better the way that economic thinking and the way the economy works.
Well, Eric, thank you for that. But, you don't get Father Sirico until you get into chapter 1. You actually get Dylan in the introduction when I use his Foundations of Free and Virtuous Society to define an economy. So before There's No Free Lunch, there was already a great economics book by one of our other participants today. So thank you, Dylan.
Yes, I did write a book as well. Feel free to buy it if you're interested.
We will put the glory of economics, and feel free to buy it. We'll put a link in there where people can buy it. They can, as Milton Friedman said, I think people tend to value what they get at the price they pay for it.
With inflation, it's on discount, right?
Yeah, absolutely. Yeah. Absolutely. Let's call it a wrap there for today. I want to thank you for listening to Act and Unwind. And if you're listening to this podcast on our website, please look in the show notes for a link where you can subscribe directly to Act and Unwind, or just search Act and Unwind on your favorite podcast app. Also, please rate and review us on Apple Podcasts, 5-star reviews only, so that more people can find this program. Thanks to Dan, thanks to Dylan, thanks to David Bahnsen for joining us. For the Acton Institute, this is Eric Kohn. We'll see you next week.
Around the nation. And is this a sort of counterproductive political strategy for Republicans to focus on these issues of language?
Anyone?
I mean, I agree with that.